What to know when buying your home, a Century Credit Union home buying presentation.
This presentation has been edited for time and content.
This presentation is for informational purposes only. It is not intended to provide legal advice or to address all circumstances that might arise. Century Credit Union is an equal housing opportunity lender and is federally insured by the NCUA.
Good afternoon. I've got a few introductions for you, and then we will get on with the home seminar. So thank you for coming tonight. Welcome to the Century Credit Union Home Buying Seminar. My name is Matt Crowder. I am the Consumer Loan Manager, and you might be thinking, why do they have the Consumer Loan Manager up here and not someone in mortgage? Well, a lot of the credit questions and ancillary loans that happen on in a mortgage transaction come my way, and look at other things we can possibly do for you. If you have loans elsewhere, a personal loan or a car loan, I can probably save you some money. So without further ado, I've got first here, Lynn Schaufenbuhl, our marketing manager, Susan Besaw, our mortgage loan officer, and with Elite Realty, I have Cade Covey, Nightberry Title, Patrick Huguenin, and then at On Point Home Inspections, I got Paul Zinker. With that, I'll turn it over to Lynn.
So the first thing I wanted to do is the first slide, of course, is talking about what you need to know to buy a home. And I think the most important thing to get started is to talk to a lender, a mortgage loan officer. It's a good starting point because they can let you know what you can probably afford as far as a loan amount or a purchase price on a home. Other things they can do is they can pull your credit and look at it and see if it's perfect credit or if there's some blemishes like collections or late payments. Oh yeah, there's different loan programs, and the program you end up in lots of times is going to depend on the type of credit you have. And we'll talk about loan programs just a little bit later. And the other thing I wanted to mention was closing costs. We keep our costs low on purpose because we are a benefit to the Century associates and their family members. And so we purposely keep our costs low. We also try to offer the best rates that we can offer, but sometimes you'll get other lenders that actually have a really great rate, but they have a lot of fees. So it's important that you understand what those fees are so you don't get into a situation where their fees are going to be $6,000 or $7,000 or $8,000 and our fees are going to be more like $2,000, $2,500. There can really be that much difference.
Hi, I'm Susan, like they had introduced me earlier. So I am the mortgage lender at Century Credit Union. The next slide that we have is the mortgage qualifications. A lot of times it depends on your credit situation as well as your debt ratio. The debt ratio is really, really important because ever since everything blew up in 2008, there have been some changes. And so now we have to make sure that if we give a loan out that somebody can afford the home, so they own the home doesn't own them. We want to make sure that somebody has the ability to get out of a home if they need to by selling or refinancing if they come into a financial situation that may not have been planned at the time that it was granted. So one of the things that we look at is the debt ratio. And on the high end, we look at 43%. So you might be asking yourself, what does that mean? So what we do is we look at your gross income, and that is from all your income sources. So if you're a W-2 employee, if you take your yearly W-2, divide it by 12, and then multiply it by 43%, that's your high limit for all your housing and your reportable debt that gets reported to your credit report. So for example, what is included in your housing debt is your taxes, for your real estate taxes, your homeowner's insurance, if there's any flood insurance that is required for the property, principal, interest, and then included in that 43%, we also look at student loan debt, we look at vehicle debt, boat, campers, anything fun, anything that would get reported to the credit bureau. The other part of that percentage is for expendable income. So what we don't look at is your cell phone bill or your electric bill, because that's considered part of that other portion of that percentage. So 43% is the guideline. Of course, as I stated, you want to own the house. You don't want the house to own you. So if you have an expensive hobby like, oh, I don't know, throwing axes at a wall, that can get pretty expensive. You're going to want to Consider that when you're looking at your home budget, because again, you don't want to have to alter your wants and your needs to own your home. So the qualifications for the loan to value, that's really your down payment. So the down payment is just what it is. It's your down payment. So you have your purchase price, your loan amount, and the down payment that makes up the full amount of the purchase price between what you're putting down and what you are getting a loan for. Century Credit Union has a unique program. We actually call it a piggyback. Depending on your credit score, we can lend up to 95%. In order to do that and not have you pay what's called PMI insurance or primary mortgage insurance, we do that in a two-tiered system. So the first mortgage is 80%, and then we do a second mortgage for another 5, 10, or 15% that's based on your credit. Mortgage qualifications, we look at your credit score. A credit score, we typically use TransUnion, but there's other ones out there. It's always a good idea to maybe check your own credit score so you have an idea of where you're at. Of course, the higher the credit score, the more lending power you have. A pre-approval, that's where it's really a good idea to get a pre-approval. A lot of times, and we have a realtor up here, they want to see a pre-approval letter before they start showing a bunch of houses to people. So what we do with the pre-approval is we do request your income documentation, we pull your credit, and we do that calculation based on your debt to income ratio to make sure that you can afford what you're asking for. We take that all into consideration, and in the letter, we actually state that we've looked at these things, and so your seller and your realtor really understand that you have gone through this process, and up to a certain dollar amount, you're ready to go. You're ready to write that offer. So the pre-approval letters are an important tool. It's not the end-all get-out, and it's not that, okay, I found a house that is maybe 20,000 more than my pre-approval. It doesn't mean that we can't recalculate and see what we can do to get you into the dream home that you're looking for. The pre-approval will save you time. It will point you into the right direction. And again, we look at that whole life balance with your home payment. If you're thinking, oh, I think I can go a little bit higher than that 43%, let's talk about it, because it's possible, but you would have to be comfortable with the payment, the principal, interest, homeowner's insurance, and the property taxes.
Susan just mentioned private mortgage insurance. Traditionally, lenders call it PMI insurance. It's an insurance that lenders require in some cases to ensure that if you don't make your payments, that they will be made whole at the end if the house would sell for less than the loan amount. Like Susan said, we tier our programs so we don't require PMI insurance. So that's, we think, a plus for you as a home buyer, because you're not paying that extra premium, which can be, probably on the low end, $50, $60, $70, $80 up to $150 on very expensive homes. So it really is a cost savings. And the PMI is required if you have put less than 20% down. So if you put 20% down, then there is no need for private mortgage insurance, and there's no need for a second mortgage if you're working with us. Usually, like I said, that premium can be kind of costly. It's usually almost always a monthly payment that gets included in your house payment. So in addition to the principal and the interest and the taxes and the insurance, if you borrow more than the 80% of the value of the property, you will need to probably pay that premium unless you're working with Century Credit Union. Now we're going to walk a little bit into mortgage products. So the mortgage products actually I'm going to talk about are just in general what you might find in the general marketplace, not necessarily what we have to offer. There's different kinds as far as what the rate, if it can go up or down. Fixed rates are always fixed. They come in 15, 20, 30, sometimes 25-year terms so that the payments are spread out over a period of time. They usually do require insurance if it's less than the 5% down. The rates are usually higher on those. That is because the longer the term, the more risk there is to the lender, and the more interest rate they will want to receive to cover that extra exposure that they're taking for the longer term interest rates. But the one nice thing about a fixed rate is they give you peace of mind knowing that your rate, if your rate's not going up, then your payment's not going up either. And I have an escrow, and escrow is something that we don't do here at Century Credit Union, but escrow just means that you would pay in your payment the taxes and insurance required for that home. And that can go up. I actually experienced that on my home loan. My real estate taxes went up quite a bit, and now I'm going to have to make a bigger payment to cover that. Then there's another kind of loan. It's called an adjustable rate mortgage, ARM. Those are out there in the marketplace. The time I think those are most useful are when people want to do a short-term financing. Like this is your first home, and you know that you're going to be there for 5, 6, 7 years. And it's really not important to you to have that rate fixed for the entire 30-year term or 20-year term. So the adjustable rate mortgage will start with a much lower interest rate. Sometimes lenders will even discount those. So let's say I have a 7-1 ARM. The 7 means it's fixed for 7 years. And once the 7 years is up, the rate's going to change every year thereafter. Now, Century Credit Union does not offer ARM loans, but we do work with another partner, which I'll talk about a little later, QRL Lending. They do offer adjustable rate mortgages for those special situations where it might be beneficial to have that kind of a loan. And the last type of product I wanted to talk to you about is a government-backed loan. Fannie Mae and Freddie Mac are the conventional home loans, but the FHA product is a product that is designed for people that have maybe a few more blemishes in their credit, but they can still get into a house. They're going to have maybe not a higher interest rate, but usually there's more fees associated with those. So when I'm working with people on secondary market loans, I usually try to get them in the conventional program first because I'd like to have lesser fees. I think everybody would appreciate that. Those programs, just like the fixed rate and the ARMs, they're all the same, 15, 20, 30 years. And like I said, we don't offer those in-house, but we do offer those through another lender.
What are the advantages of sticking with the credit union you know? Well, there's quite a few. The first thing is that you know us. You can come and talk to us anytime. We're not in some other state, county. We're right here, sometimes in the same building where you work. The other thing is we have low costs compared to our competitors. You can borrow up to that 95% based on your credit without the PMI insurance. So why pay an insurance company when you can just make more on your monthly payment and actually build your equity that much quicker? We have what's unheard of in the industry. We have a 120-day rate lock. May not be a big deal a year ago. Right now, it's a pretty big deal. Every time the Fed meets, guess what? They're cranking those rates up every time. Once I do a pre-approval with somebody, they know that, hey, this is going to be my payment on this dollar amount because this is my rate lock. And as long as I can find a house in 120 days, we're good to go. We're ready to rock with making an offer. And you'll have a personal person, me, hello, and along with the rest of the credit union team that's here to help. Anyone that's worked with me, I try to return emails within, at least 2 hours, if not 3, unless I'm out of the office. But that's why you work with an associate. We know us, you know us, we know you, and we do our best to get to a yes. When you ask for a loan, we try to figure out how we can get that loan done for you.
This slide is talking about that partner I was alluding to a little earlier, QRL Lending. I've worked with them at different financials over the years, and we've had at least 4 or 5 years of personal experience working with them. And what they do is they help us with the more complicated loans. So like the government loans, they have lots of requirements. And the same thing with some of the conventional Freddie and Fannie. So they help me get you into the product that's best for you and get all those I's dotted and the T's crossed. And we're there with you all the way through the process until closing. And at that point, they actually service the loan, which means they're going to take those payments in and apply them to the principal and keep a running balance on your loan. The one thing about QRL is that they can do ARM loans where we can't at Century Credit Union, and they do this government type of loans, like I said, that are available to those that may not have perfect credit. And they are available in 50 states. There's not a lot of lenders out there.
One thing I'm going to back up on, one other really significant difference with Century Credit Union is that we allow you to make payments weekly or biweekly. We even have payroll deduct. So you can have that payment shipped right to us, right from your paycheck, kind of like swiping your card at lunchtime. But that way we can set you up. And what that does is it actually makes more payments on your loan that get applied weekly, biweekly, or monthly. And every time your balance goes down, it recalculates what interest amount you're going to pay on that loan from there on out. The home buying process, choose an agent, find a lender, and we hope you come to us. You want to get a pre-approval. That's going to be really, really important in the home buying process. Create a home wish list. What are your wants, your needs, what's not negotiable? If you need no steps going upstairs, you have to have a ranch, let your realtor know that and make your list. It's going to help them. It's going to help you in the search by not looking at homes that really don't fit your needs. Make the offer. Get that offer to us, get your mortgage approved, do your due diligence, attend the closing, and move into your house, but don't ask me to help you move because that I won't do.
I'm Cade Covey. I own Elite Realty here in Stevens Point. I service all of central Wisconsin, licensed for the entire state, but we specialize right here in central Wisconsin. I'm just going to go through some of the different things of what I do and what you can expect from a realtor that you work with. First and foremost, I think one of the most important things to do is you guys are coming to us, right? You're expecting we're the professional to be able to educate you and put you in a good position and let you know what the market dynamics are like. Another really big piece of it is analyzing your wants and needs. And the reason I say analyze is a lot of times I'll deal with buyers and they'll come and they'll say, hey, Cade, we want a 3-bedroom, 3-bath ranch house on 5 acres with an extra garage. We'd like it in this school district. We want granite countertops. We want all this. And by the way, we'd like to spend $250,000. Well, good. When I find you one, I hope that I can find one for myself as well. And why I say that is analyzing to help you guys realize that what it is that you're looking for, is it realistic? Is it something that you guys want this, and this, but really need this, and this? And can we make it all come together? I would love to tell you that you're going to get both. The reality of it is that you're likely probably not going to get everything you want, but hopefully at least be able to get what you need. And that's where I can help you to decipher that. Maybe we can't get the 5 acres, but we can get you the 3 bedrooms and maybe 2 bathrooms, or maybe it's a little bit smaller than that and you can get the granite countertops, but just trying to make all those things fall into place and help you get what you're looking for. From that point, I can help set up a personalized search for you for what you're looking for, whether it's a certain area, size of house, certain age range, X amount of land, school district, you name it. Whatever that is that you're looking for, I can personalize that search to help find you the best home for you. Coordinating the work of others in the process. So basically, my job is to take all the pieces of the home buying purchase and put them together so we can get from an accepted offer after you find the house to get you to a day when we close, shake hands, and get your picture with a sold sign. Looking at it is obviously is going to be the very beginning stages, getting an accepted offer, and then from that point, there are a lot of other pieces that fall into play. From right away, as soon as we get that accepted offer, getting it over to your lender so that your lender can get to work and make sure that dates and deadlines are met for financial commitment, appraisals, anything else of that sort. If you decide to have a home inspection done, making sure that a home inspector can get in within the 15 or 21 days or whatever the amount of days are that we have set within the offer for the contingency for that. Setting up with the title company so that they've got everything they need to get your house titled properly and that we have a date set for closing. So there's a lot of different pieces of the puzzle that all need to come into play to end up at the closing table. Helping you with negotiations. A lot of times when you think of negotiations, people are thinking, well, that's just the very first part of purchasing a house. And this is what the house is listed for. What can I actually buy it for? The other part with negotiations, people are typically think when you negotiate, you're going to start here and you're going to end up here. Unfortunately, with the market that we've been dealt here in the last few years, we're not only negotiating, but we're figuring out how to negotiate above and beyond what the asking price is to be able to get you into a house. There's other negotiations though that come up too. When you have a home inspection, if you have what is called giving the seller the right to cure, the home inspection occurs, the home inspector comes in, identifies defects. From that point, we then have the right to go back and ask the seller to take care of or cure whatever those defects are that are found. Some might be super serious and you want the seller to take care of prior to closing. Others may be less serious that you can figure on taking care of on your own down the road. And at that point, we could negotiate with the seller and say, Mr. and Mrs. Seller, we would like to still purchase the house, but because we need this, and this, we'll still purchase it. But maybe, we would like $2,000 off the purchase price or towards closing cost credit or something of that sort. And then the last, assist you with any problems. And I'd love to tell you that once the offer is accepted, it's going to be smooth sailing all the way to close. But there are road bumps that come up. My job is just to try and help the impact of those road bumps be as small as possible. Next part, we'll go over buyer agency. And I'll just talk about this in terms of what it was like when I bought my first house. I was no different than any of you sitting here. I didn't know what it all entailed. I figured that when you drove through town and you saw a house for sale, you saw an agent's name on the bottom, that's who you called and that's who was going to show and sell you the house. You can do that. The issue with that at times is that with any house that's listed, whoever's name is on that sign is who is under contract to represent that seller. So if you call Joe Smith, who has the house listed, and have Joe Smith show you that house, Joe Smith has to do everything to protect and maintain and do everything in the best interest of that seller. So can't negotiate for you, can't tell you why you shouldn't buy the house. All they can tell you is all the good stuff. They have to obviously let you know and act in a morally proper and ethically correct way. They can't lie to you about things if you ask questions, or if there's a hole in the roof, they have to let you know that there are issues of that sort, but can't give you any sort of an advantage over the seller due to the fact that they are representing the seller. So that's where a buyer's agent comes into play. A buyer's agent is going to work for you the same way that a listing agent would work for a seller. And buyer's agent, my job is to go out and tell you what the market is like, tell you what's good about a house, what's bad about a house. I think it's really easy to tell somebody what's good about a house. The harder part is telling somebody what's bad about it. And why is that important? Well, if I sell you a house and I sit and tell you everything that's great about it, and you call me back in 5 years and I come in and go, oh boy, well, this one's going to be tough to sell because of this, and this. Well, Kate, where the heck were you when we were buying this place? And you told me that this place was excellent. Well, that doesn't usually go too well, right? Help you with negotiations, telling you that this house that may be your dream house that's located next to a landfill, why you maybe don't want to buy it, even though it's your dream house. All sorts of those different things. But as a buyer's agent, I'm bound to you, represent you in your best interest. Went through the exclusivity in most cases. So what we have is we have a buyer's agency agreement that states that I would represent you as a buyer. And with that, in most cases, you're not going to pay anything for that. When a seller lists their house with a listing agent, they have in there where they're going to pay a commission. And out of that commission is going to be what they call co-broke compensation, or going to be paid if another agent were to step in and sell the house representing a buyer. There are some situations, for instance, if we're looking at buying a house and you find a for sale by owner home, where I'm working with you or an agent's working with you as a buyer, that we can still represent you and walk you through, so it's not the blind leading the blind, to help you still procure interest and make sure things go the way they do. And at that point, we can negotiate in where a seller is going to pay a commission. So it is something that is negotiable, but in very, very few cases is a buyer ever going to be responsible for paying any sort of commission. The seller is going to most likely take care of that. Buying concessions and contingencies. So concessions first, as it states, are going to be clauses that obligate the seller to help in financial way. Situations of this sort would be, as you guys were talking about earlier, closing costs. You may have only, say, you've got your down payment of 10%. Above and beyond that, you don't have additional money to take care of any sort of closing costs or prepaids to help maybe buy down a loan, pay for insurance up front, inspections, testings, different things of that sort, where you can actually ask the seller to pay or give you some sort of a seller credit. Maybe it's $2,000 or $2,500 or whatever that amount is. And what you basically have to figure with that is, if you were to, say, buy a $200,000 house and you're asking the seller to help you with some of your closing costs, if you made an offer of $200,000 and asked for $2,000 in closing concessions, you're really offering that seller $198,000. But it is something that's possible depending on whatever your needs are, and we can create an offer based off whatever it is that you need to best meet your needs. Financing contingencies. Prior to getting an accepted offer, there is a whole section in the offer to purchase that goes through what the financial terms must be. So in there, it will go through based off of likely what the pre-approval letter states. If it's a 20%, let's say down 20% program, we'd look at the purchase price and then figure what 20% is for a down payment. And we'd put in there saying, so it's a $100,000 house, 20% down payment. So you're going to finance no more than $80,000. Then we're going to base a payment saying that based off this $80,000 loan amount, the payment can't be any more than this based off 80,000, whatever the interest rate is that we were able to lock up front. But basically the financing contingency is stating that it has to meet your terms. If any of these terms come back to not be where you're okay with them, you have the right to be able to walk away from the purchase of the property without being held responsible for anything in terms of giving up earnest money, down payment, anything of that sort. Same with an appraisal contingency. We're running into with this market right now where prices are all over the place. We have limited inventory. People are offering above and beyond asking or priced by a lot many times. And that's where we have appraisals fall into place, stating that you'll buy a house or say the house is 200,000 or 100, whatever it might be, that the house has to at least appraise for 200,000. If we run into a situation where the purchase price is 200,000, the appraisal comes back at 180,000, you have the right to go to the seller and say, I'll still buy this house, but I'm not going to pay more than what the appraised value is. Does it always work? Not necessarily. Depends what the dynamics of the market are. When you're in a situation where you have, like in this market, a lot of times where you have 5, 6, 7 offers, a lot of times sellers will say, we'll work with you a little bit, but we want you to come up with a little bit more money. We'll come down in price a little bit. If not, we may move on to one of the other offers. There, you do have some protection at least there. Inspection contingencies. So in the offer to purchase, you have the right to have a home inspection done. Have a state of Wisconsin licensed inspector come in, look at the house and identify what are defects. And if defects are found, those are things that you can ask the seller as long as you gave the seller the right to cure, meaning fix or take care of, the right to take care of those things, and you'll still move forward with the purchase. Let's say you purchase a house, Paul Zenker comes in, does a home inspection, says, hey, the foundation's falling apart. This thing is terrible. We're going to need something serious. This needs to be looked at, and have a foundation specialist come in. Well, at that point, we'd write an amendment, get it over to the seller, say, hey, we'll still buy this house, but we want a foundation specialist to come in, take care of this at seller's expense, and get it fixed. If not, we want to get out of this purchase. Seller decides not to fix any of this stuff, you then can have the option to remove yourself without penalty from the offer to purchase. Different questions that you may ask your realtor. So there's a whole list of different questions on this list. A lot of these questions I think are good, but also whether or not you're asking them, stuff that your agent should be going over with you too. So not that if you forget something that the agent doesn't point it out or whatever it might be. I get often asked, why is this house for sale? Probably the most asked question, and it's probably the question that I don't get the best answer for. Why is it for sale? Just figure because they're moving, right? Nobody's going to say, oh, man, this house is terrible. We just don't want to live here anymore. Hopefully your buyer loves it. Can still ask it, but the reality of getting the honest answer why they're selling is probably not great. How long has it been for sale? This is important because it's going to affect your negotiation power with this, or should at least. If a house sits on the market, especially right now's market as dynamic as it is, for more than, say, a month, you probably have to figure that there's something, either maybe there's an issue with the house, or more than likely that the seller just started and asked way too much money for the house. If a house is on the market for a couple days, you want to look at it, there's multiple offers. We also know we're probably not going to go in and be able to offer them less money than what it's listed for, and talking about how much over asking price we have to go. Flip side, it's out there for a month or 2 months or whatever. You're probably the only person that is going to be at the table with an offer. And now we can figure and go, okay, it's listed for 200,000. Maybe we can offer 175, or at least do some negotiation of the way it used to be when buying houses, rather than figuring how high above and beyond we have to go to get it. What you should look for when touring houses, there's a number of different things. I'm kind of from the mindset, depending on what your budget is at, looking for just a good, solid house, something that it seems as though it's well built. Your mechanicals are strong. When I say mechanicals, maybe newer furnace, water heater, windows, age of the roof. If you're in a rural setting, how old is the septic system? How old is the well? Maybe the house is a little bit ugly, but as time and money allows for, you can fix it up. If any of those other things are not working and functioning or are in need, it's going to be big dollar stuff, and you're going to need them for a day-to-day basis. You can live with ugly countertops or a yellow bathroom, but if your well goes out or your septic system quits working, it's probably not going to be the best situation for you. Seeing problems with the house, I have an eye, obviously, or any, I think, seasoned agent is going to probably be able to point out things like the roof looks like it's in good shape, or this furnace says that it's only 5 years old, so we should still have some useful life expectancy on it, meaning that it should go for a while yet. Beyond that, it's not my scope. We're talking getting into with a home inspector where he will be able to come in and say, okay, there's this wrong or this wrong or this wrong or this needs further evaluation. I just don't want to point out things that I'm not well versed in, that, as I said, beyond my scope. Thank you guys for your time.
Okay, my name is Pat Huguenin. I'm a regional manager for Knightberry Title Services. I have a question for everybody out there. Who's ever heard of a title company or knows what a title company does? Anybody? Okay, let me tell you 2 things we don't do. We don't do car title loans, and we cannot renew your vehicle title either. That's what everybody thinks of when they think of title. When we talk about title, we're referring to your title, your deed, your ownership to the property that you just purchased. There's some important things to think about. Title insurance is really what a title company does is kind of broken into 2 aspects. There's the title insurance aspects, and then there's the closing aspect. And I'm going to go through both of them with you here today and kind of give you some examples of what a good title company does, what their involvement in your transaction is. What's really, really important if you're buying a house from somebody? It's really important to know that you're buying it from the right person. Well, how do you know that? Are you going to go to the courthouse and research all the records to find out if it's the right person? No, you've got the title company to do that. We do all that boring behind the stuff courthouse crap. You don't want to do that stuff. So as part of the transaction, what happens is title company is going to do the search. We're going to research the public records. We're going to go back for 40 to 60 years with the registered deeds office, with probate, circuit court. We're looking at everything that affects the property that you're looking to buy. We're looking to see who's in title, who owns the property, what the property is, how is it legally described. Your property is not just an address. Your property has a legal description, which is how the property is actually indexed down to the courthouse. That's what we're insuring. That's what you're buying. Addresses can change. Your legal description, unless you sell a portion, is always going to be the same. The other things that we're looking at when we do our search is we're looking for monetary issues. What people or parties have an interest in that property? Their interest has to be taken care of in order for the sale transaction to go through. You don't want somebody's mortgage still on your house, right? You buy a house, you're expecting the only mortgage to be on there is your mortgage with Century Credit Union, not the one from the seller or somebody 40 years ago. You don't want any mortgages out there. We're looking for judgment creditors. Say this person hasn't been paying their taxes. They're not filing taxes every year. The IRS slaps a tax lien, files a tax lien against them. That affects the property. Real estate taxes. If the seller hasn't been paying their real estate taxes, the county can come and foreclose and take that property back. So these are the things that we're looking for when we do our title search. It says right there, we do the tedious research at the courthouse, so that way you know you're in good hands. What could happen if you don't have title insurance? Well, there's a couple things. We just talked about who's actually able to sell the property. Who is the seller? Do they actually own it? Well, what if they lied? What if it's not really them? What if your neighbor says that, hey, you can't get to your property because you're crossing my land to do it. You don't have an easement or access to do that. I like this one. Seller took all the money and didn't pay his mortgage lender. Again, is that mortgage lender going to say, no big deal. We'll just remove our mortgage? No, you're going to find out in 3 to 6 months when they file lis pendens and intend to foreclose on your property. So these are all the types of things that can happen where title insurance is going to protect you. And it says right here, if you're in a lawsuit, who pays your lawyer? Lawyers aren't cheap. They are not. How much does a lawyer cost? You guys can look that up. But trust me, the cost of title insurance is way less than what you're going to hire an attorney for. So who pays for title insurance? Well, the answer is it kind of depends. It's really in your offer to purchase. In the standard Wisconsin real estate residential offer to purchase, there's a section on title insurance. And it says basically that the seller shall give evidence to the buyer in the form of title insurance policy in the amount of the purchase price. In most scenarios, the seller is paying for it. So you're not paying for it. That's nice, isn't it? They're required to say, hey, I'm selling you this house and I'm giving you insurance that my cost, that your title to the property is good. There's also about a gap endorsement. That's another part of the offer to purchase that's in there. And that's just protection for anything that may happen prior to your deed getting recorded. I mentioned that title insurance, it's a two-pronged thing that a title company does. As I mentioned, we do the title insurance. We do this search to provide you guys with the information of what you're buying and what needs to be done. The next part we have is the fun part, closing. What a title company's involvement is in the closing is, I like to think of us as a hub, an information hub, because we're gathering information from all the parties in the transactions. We're gathering information from the buyers, from the sellers, from the realtors, both listing and selling. There may be attorneys involved. We're coordinating with Century Credit Union and their closing department and their lenders. And we're gathering all the information necessary to conduct the closing. We handle it, in essence, we're kind of handling the paperwork at closing. We're going to make sure that the seller, the correct seller, signs the deed. You, if you're getting a loan with Century Credit Union, we're going to make sure that you sign your promissory note and then the mortgage, which is their security in the event that they had to foreclose. You're also going to sign your closing statements. So all of the information that we're taking in from the realtors, we've got commissions, we got mortgage payoffs, we have all this stuff. We're collecting all this information to prepare all these documents. Those closing statements are yours and the seller's acknowledgement that everybody paid for or got paid what was necessary as far as the transaction is concerned. When the closing date comes, there's going to be some things that you're going to need to know. The first thing I mentioned is you're going to get a title insurance commitment prior to closing. After we've done our search, you're going to get your title commitment. You need to review that. You want to make sure that your name's appearing correctly, that you're buying the right property, all that good stuff. You're going to get those closing statements in advance. Those closing statements are going to tell you how much you need for closing. What you need to bring to closing: bring your driver's license, valid photo ID, passport, something like that. And you're going to need to get us some money. Chances are most of our transactions, you're going to be coming to the closing table with some money, which would cover your down payment, closing costs, that type of stuff. Funds for closing normally need to be in the form of a cashier's check, or they can be wired. We don't accept personal checks over about $500 because we're taking in all your money, we're taking in the lender's money, and then we've got to pay everybody else. Here, a title company referred to sometimes as an escrow company because we're taking in everybody's money, making sure everybody gets paid. If I take your personal check for $10,000 and I pay everybody out, and then your bank says, they don't have this money in there, well, then guess who's in trouble? Trina and Hannah. Because then they call me and say, oh my God, what do I do? And I said, no, we'll take care of it. Just some things to keep in mind as far as what you're going to need for closing. The nice thing about the closing is usually, not every scenario, but the closing's the fun time. The closing's the easy part. You've done all the hard part. You've sweated and worried and, oh, my offer get accepted is, oh my God, and the lender needs this. And didn't I give them that? And I got to get some more pay stubs and all this stuff. When you get to closing, everybody's sitting there, buyers and sellers, everybody's happy. And you guys are going to sign a ton of documents. Your loan papers, you're going to, 60, 70, no, maybe not that many, but you've got plenty of documents you're going to sign. The seller's going to sign their documents as well. But the nice thing is, at the end, you've done all that. As long as you give me that check and you sign all your documents, then I get to give you keys. The closing is normally the fun part. Everybody's happy. You guys, you as a buyer have your first home. The sellers have sold their place. They got their check. They can move on. The realtors are happy. They got paid. And the bank says, all right, we'll see your first payment in roughly a month. That's kind of what the title company does. If you're looking for more information, feel free to visit our website, www.knightberry.com. That's got tons of information on the closing process, title insurance, what to expect, a lot of the stuff that we just went over here.
I'm Paul Zanka with On Point Home Inspections here out of Stevens Point area. I service central Wisconsin, but licensed throughout the state of Wisconsin. We're going to kind of go in briefly about home inspections, what they are and what we can do, what we can't do as licensed home inspectors in the state of Wisconsin. What is a home inspection? What does it mean? It means that it's a visual inspection of the building, the systems, mechanicals. Then this very important word at the bottom or phrase, it is not a technically exhaustive inspection. So what does that mean? Technically exhaustive inspection means, am I probing things? Am I sticking specialized equipment? Like, for example, multimeters inside of a furnace to check the contacts to make sure that everything is reading properly. That no, I'm not allowed to do that. What I do, I check and I look at it and I make sure that all the parts are moving correctly. I don't see anything that is abnormal, like maybe condensation dripping or loose wires or a blower motor falling apart, rattling or anything like that, or an inducer fan, which is for a furnace, which is blows out the exhaust. Is that running properly? It should be smooth, very little noise coming out of that. If it's humming really loud, may have a concern to it, may not be working properly. It's important for us to know that a home inspection is not technically exhaustive. I go in, I look at it, check out the house, the structure, the mechanicals, the electrical, the plumbing. And if I see something that is of concern, it'll go in my list, which is categorized. I'll recommend repairs, further evaluation, monitor, maintenance, something to look into a little bit more or deeper. What do we get into as far as that goes? Mechanical and structural components, foundations, are our footers, are our foundation walls. Then from there, we've got everything inside. And then we have our electrical system, we have our plumbing system. All of those systems work together to create this one structure. So, and if there's something not going correctly in that or one of the systems, we want to make sure that it gets looked at and taken care of before you move in. I give you all the bad news you don't want to hear. It's not bad news. It's what you need to hear. It's not what you want to hear, but it is exactly what you need to hear. You're making a huge investment on this purchase. So my job is to tell you what I found, what's going on. The roof, so that's another one. That's a big thing. I need to see at least 80% of that roof covering to tell you, hey, this is the general condition of that roof material. If I can't get up on there or if it's covered with snow, I can't comment on it. So I'm going to write in my report, I do recommend further evaluation. It's not necessarily a defect in any shape. There's nothing I can tell you. So plumbing systems, this is important. When I go in, I turn on the faucets, do a quick look to make sure that nothing's leaking, but I'm going to run that system. What I'm doing is I'm going to overload the system. I'm looking for functional water flow, water pressure, and I'm looking for drainage. Is there a concern with that drainage of that water, that wastewater? Is it draining slow? Is there back pressure? Is there a floor drain down in the basement if there's a basement? So I'm going to try to overload that system as much as I can. Again, limited. Whatever visually I can see, I'm going to check it out. If there's any visual leaks or anything like that, if I see moisture stains on the ceiling and I know that there's a bathroom located right above there, there's probably a plumbing leak. So it just depends if if that's your roof or if that's the second floor or whatnot. Continuing with plumbing, what I can look at, that also includes your fuel system. So the fuel distribution, different pipes, how are they supported? Are there any gas leaks? And that also includes exhaust systems. So is there a concern with a furnace exhaust vent? I'll point those things out. Electrical systems. What type of service? Below ground, the amperage. I've got to look at 3 different things at a minimum to determine what type of service you have coming into your home. So that means the wire size, the main circuit breaker, and the panel capabilities. So I've got to take that cover off and I've got to look inside the main panel and I've got to look at the wiring. I got to make sure that everything is properly done in there as far as are the overcurrent devices properly sized for the size of wire that's coming in. I'll go around to outlets. If I can get to the outlet, I'm going to test it. So looking at different things, the wiring, what type of wiring, where is it, how is it done? Polarity, meaning hot and neutral wires are reversed, things like that. So I'm going to look at that. Ground fault interrupters, the operation of ground fault circuit interrupters. I am required to test every single one of those. Okay, if I can get to it, I am required to test those because they are safety devices. Interior walls, I don't report on cosmetic. If it's an exterior wall, it does play a part in thermal efficiency. Steps, stairways, counters, random samples of interior doors. Believe it or not, interior doors to bedrooms or bathrooms are actually not required. You don't have to have them. If you don't want them in your house, you don't have to have them. But I'm going to test them. I'm going to close them, make sure that they're opening and closing. Looking at those separation walls, what does that mean? Fire separation between your garage, attached garage, and your living space. A fire separation wall. I'm going to report on it if it's not there. Water penetration or signs of, if I see a moisture stain or any signs of abnormal moisture in any shape, form, or size, I'm going to report on it. I'm going to try to find out where it came from. Sometimes we can't figure that out because water travels the path of least resistance downhill. I'm going to point that out and I'm going to tell you what the condition is, monitor it, things like that. Or if I can find out where it's coming from, I'll let you know. Heating system, we talked about that. One of the things that's very important for me to tell everybody is fireplaces, especially wood burning appliances. I do not ignite them. I am not allowed to ignite them. I can only look at what I can see visually. I'm not sticking a camera in the chimney flue. So it'll always be recommended that a certified chimney sweep do a level 2 chimney inspection because we need to know what that flue condition is. Central air conditioning, right now we're in the middle of winter time. I can't start those. They could get damaged in this cold weather. So we'll do a visual of that. Insulation and ventilation. So I'm going to get in the attic. I'm going to look at your insulation. I'm going to look at the ventilation to see if I see any bad signs of like condensation or anything like that up in the attic. I'll get up there as much as I can. I'm not allowed to disturb the insulation, but if I can safely traverse the trusses or the rafters without disturbing the insulation in there, I'll walk around up there and I'll get in there. Otherwise, I'm going to take my time and I'm going to look at it as much as I possibly can to tell you the condition of that. So that would go into the ventilation and all that. Big thing, bathroom and kitchen exhaust fans. I see them a lot. They can cause harmful conditions in your attic. Definitely want to make sure that they're discharging outside the building envelope, not into your attics or soffits. We want to make sure that those are vented outside properly. So written report, basics, list of components of an improvement to residential real property that the home inspector is required to inspect. Describes any defect that is detected by a home inspector during his or her home inspection and a summary page. So these are the things that I'm required to have in there. There's a list. There's major, safety. Those are defect. Maintenance or needs repair. Items to monitor, further evaluation. Then general maintenance items are in that report as well. And then there's a separate summary page. So that's separate from the actual body of the report, which is where all your pictures are. And in there, you got your body, but your summary page is just a condensed version of what's in the actual body of the report. Defect, this is important because my definition of defect is different than what's written in your offer to purchase when you work with a real estate agent. They're very similar, but there are some differences. So this is what I have to go by as a licensed home inspector, this definition here. So it means a condition of any component of an improvement that a home inspector determines on the basis of a home inspector's judgment on the day of the inspection would significantly impair the health or safety of occupants of a property, or that, if not repaired, removed, or replaced, would significantly shorten or adversely affect the expected normal life of the component of the improvement. So if there's something wrong with a component and it can affect your health or safety or significantly impair the structure, in any way, shape, form, or that, I have to report it. Little humor, but it's very serious. A home inspector may not report on the market value or marketability of a property or whether a property should or should not be purchased. I plead the fifth. I will not answer that question ever. Thank you. All right. So what is an appraisal and what is a home inspection? I'm going in, I'm looking at everything. I am inspecting all the systems, the mechanical, the structural. An appraiser is not an inspector. They are there to appraise the property for value. And then they have their guides that they follow. They will run their comparisons to the market and so forth and do all of that. They are not home inspectors. I am not an appraiser. Two separate jobs, two separate standards, two separate things that we're doing. I'm always open to answer any questions in the future, so call me. Thank you.
Thank you for viewing What to Know When Buying Your Home, an SCU home buying presentation. For more information, please visit our website at centurycu.org/mortgage-loans or contact us at 715-346-6534.